into training. My name is Ivan. I'll be your trainer for this question. This is the VDA April 2023 paper, question 25. I am required to prepare an audit schedule for each columns with the following headings: the original trial balance without adjustments, the draft profit or loss item, the draft statement of financial position. Each section should have the debit and credit columns in the balance. I'm told Mr. Alex Mawezi, an audit client, has been scheduled for several years. He has provided you with the following list of account balances as at 31st December 2022. So I separate out my answer. Format my work. Then I'm going to pick out the labels of the trial balance as given. So that I can build my trial balance and have original trial balance. I'll have the adjustments, and then I'll have the final trial balance. For each, I'll have a debit and credit column. And just to differentiate, I'll give each column a different shape. Just a light cube to differentiate between my columns. So the first thing will be to distinguish my values here as either being on the debit, credit side. So capital is the capital amount, should be on the credit side, revenue and income on the credit side, payables and liability on the credit side, return outward. Now return outward is an amount that I had purchased and now I'm returning back to whatever I had purchased from. So that reduces my purchases and so it will be on the credit side. Expected credit loss and liability on the credit side. Discounts, there should be this discount allowed. This is an expense on the debit side. Then my discounts received, this is an income on the credit side. My purchases are an expense on the debit side. Return inwards, this is an amount that I had sold and now it's being returned to me, which reduces my sales and so it will be on the debit side. My distribution costs is an expense on the debit side. My drawings reduce my amount of capital, so this will be on the debit side. My rent, heating, postage, advertising, salaries, credit loss, all these are expenses, so I can fix their values on the debit side. Cash in hand, cash at bank, these are assets on the debit side. Inventory and assets on the debit side. Same for receivables and my PPE and cost. My accumulated depreciation reduces the value of my assets, which should be on the credit side, and my depreciation for the year into expense should be on the debit side. Before I balance, I'll leave a bit of space for a few additional components once I add my adjustments, and I'll balance at a lower point right here. So this will be the sum of everything on the top. Copy this across, and you can see that our original trial balance is already balanced. Next, I would like to have my formulas for the adjustments and for the final trial balance. Beginning with the final trial balance, I want to make sure that the final adjustments are the final debit will be the original debit plus the adjustment debit will be the final debit, and same thing for my credit should be the original credit plus the adjustment credit to give me my final value. So I will formularize my adjustments to make sure that these are appropriately. I can copy that down so that technically already my final trial balance is balancing, except I have no adjustments. I can now deal with my adjustments. As you begin the audit process, you discover the following adjustments that should be made to finalize the financial statements as you carry out the substantive test. You have closing inventory. We use this in our final P&L, in our final SFP. Insurance to pay. This is a current asset. So I'll have insurance as part of rent safety insurance. So I'll copy this label and call it prepaid insurance. Prepaid rent safety insurance. This is an asset, so it should come on the debit side, an amount of 550. But if I have to pay, I should reduce the original expense by that amount of 550. Now, to reduce my expense, I will have to credit my rent safety insurance. But to keep in line with the formula they have at the end, instead of having a credit here, I'm going to this other side and make it a negative debit. So this will be equal minus this. And that way, this trial balance is still balanced, and so is not balanced because of this formula haven't gotten all the way to the end. So let me copy this to the end, and so this. We can make all our values comma separated with no decimal points. So in so doing, my trial balances are balanced. Next, I have keeping in lighting accrued. An accrual is an amount of a liability. So I can copy this label from here. Keeping in lighting accrued, and because it's a liability, it comes with on the credit side. If this amount is accrued, I should copy this amount, or rather I should add this to my original expense in the trial balance. So heating and lighting should be debited with 680. Then my prepaid rates. Now rates is also a part of paid rent rates and insurance. So I want to combine these prepaid rates with this amount of insurance prepaid. So this 560 will be 560 plus 2717, and this adjustment up here will be the same amount. The sum of both amounts. Then I have my end year expected credit loss estimated at 1565. So my end year expected credit loss comes in as I should check if it's an increase, that's an amount of an expense, if it's a decrease, that's an income. So I had an expected credit loss to be beginning of 1256 and the end year value is 385. So I have an increase in the expected credit loss. My credit loss is also called my amount of bad and doubtful debts. So this is an increase in expected credit loss, and that will be an expense. So this will be 1865 minus 1256. Now this expense will be matched by a credit on the expected credit loss. Now to bring it to that final value of 1865. There we go. And our trial balances are still balanced. Then we have the following errors or omissions were identified. We have an invoice for goods who have not posted 2640. So that means I should add this sale. And since I have not been told that I will pay, I will add the corresponding amount to my amount of receivable. So my sales here, my revenue, I want to credit this with 2640 and then debit my receivables here with the corresponding amounts. Then drawings of goods not reflected in drawings. So I have an amount of extra drawings of 406. But then, because these are drawings of goods, they will reduce my amount of cost of sales. And so as a proxy for that, I will reduce my purchases by my amount of extra drawings of goods. So my drawings will have an extra amount of 450. So then I will have to reduce my purchases here for the corresponding amount. This should have been a credit, but because I want to keep my values consistent, I brought it this side as a negative debit. Then additional credit loss limited. So this is an amount of bad debt. I should add this to my bad debt expense and then reduce my amount of receivable. So I have credit loss and expense. So on the debit side, but then this amount should go on to reduce my receivables. So my receivables, here they are, will be that minus this 220. And my value is still balanced. My depreciation expense for the year is understated by 120,000. So I want to increase the depreciation expense by 120,000 and then also credit my accumulated depreciation with 120,000. And that is it. These are all my adjustments. And if you check your work, you should notice that your work is fully balanced. So I can now prepare my final P&L. This is Mr. Alex Maruzi. My statement for profit or loss for the period ending, profit or loss for the period ending 31st December 2022. I'll be using 3 columns. So first thing will be my revenue. Just to make my work convenient, I'll hide these two rows so that I can use just the final child value. So I have revenue, which is an amount of 132, but then I had return inward, which reduces my revenue to give me my net revenue, an amount of 1260 and 189. Then we can less my cost of sales. This involves my open inventory, which is given in the trial balance 7827. I add purchases, an amount of 73 million. I less my return outgoing because this reduces my purchases. So this should be equal minus. And then I think I also had the other amounts affecting my cost of sales. So then I can finish with less closing inventory, which were given in additional information as 8.875. This gives rise to our cost of sales, so equal minus this, equal minus the sum of all these values. Then now my gross profits will be the sum of this and this. So then I can have my other expenses, which were on the debit side, distribution costs. I want to put this as equal minus. Then I have rents and copy this down all the way to creditor and pick this as negative values. Just as a way to keep track of the values that I have already adjusted, I can mark my new values. I forgot to use my discounts. You see, it should have been here. It should have given me my net income. So I'll add that back. I have used purchases and return inwards and distribution costs and all these expenses. So before I proceed to my expenses, I need to account for my other income, which I have discount receipt, an amount of 875, which gives me, we should call this net revenue and call this gross revenue. So this should be the sum of these two. Then part of the expenses are this discounts allowed. You can mark both values as this. Then I have my depreciation expense, an amount of 6157, and then finally my increase in the expected credit loss, an amount of 609. This gives me my total expenses. So this is equal minus the sum of all this. So that my net profit should be just be the sum, not equal minus, because my expenses are already negative. So that my net profit should be the sum of this and this. Give me 14,311. Then I can present my statement of financial position. So similarly, I'll have Alex Mawezi, statement of financial position, add at 31st December 2022. Again, I'll use the column. First things first, I'll have my non-current assets. For which I'm given the PPE at cost with a value of 60 and my accumulated depreciation with a value of 31 equal minus to give me a net book value here, a net book value, the sum of those two of 28 million. So then that is the only non-current assets. So this is here, this is here. Then I have my current assets. First of which being my inventory, which I was given as 8.875 million. But then I also have cash in hand, cash at bank, can mark these as used, and also my inventory because I have the value. I also have my trade receivables. More than that, so this is what to use. I have my prepaid rent with insurance. And I think that is all my current assets. Nothing else is left. So at the bottom here, I can have a sum of this, and then a total sum here. This is the sum of my non-current assets and my current assets. Then I'll have my equity, which is made up of my capital. Now my capital has an adjustment, so I'll use the second column. My capital is adjusted by my amount of drawings. So my drawings here reduce my capital. Then I also have the net profit for the year. So that I have the total capital for 45 million. Then I have my non-current liabilities, of which I have, so this is already due, mark this as due, this as due. I have no non-current liabilities, I only have current liabilities. Payable. I have not received them. So I'll have current liabilities, the first of which will be my payable. Then I have other amounts like my expected credit loss. Though my expected credit loss should have been deducted at the amount of my receivable. So this receivable should have been that minus my closing expected credit loss. So then finally I have income lighting accrual, an amount of 680, the sum of which adds up to 56,184. So I find the value 56,184. It seems I have an error. My error could be coming from one of these values. Seems in trade receivables, they picked the wrong cell. So let me change this to pick the right one. There you go. My statement is balanced. And that should have been the solution. I'll see you in the next one.